All right, founders, it's time for another pitch deck critique and review. And this time we've got G Goal. I think that's how you pronounce this startup. And that's going to be a major point of contention. I'm going to point out right away. I do not understand how you pronounce your startup's name. So if you want to make this easier for the investor and not create some cognitive dissonance, some cognitive friction right up front, just spell out the name and make it very clear. This logo creates a problem right out of the gate. It's not the best impression. So if the company is actually called G Goal, then just put it that way and then have your logo up at the top and make this very clear right from the get-go. Next, we're going to see that there is a tagline here called Banking Personalized. This is a fluffy hype marketing jargon. It doesn't mean anything to the investor. You want to change that to be a one-liner that explains the startup in a very simple one sentence, explaining something about the problem solution and gives me an idea as an investor where I am. Is this a fintech? What's going on? Is this a consumer app? What's going on here is really what I'm asking. And then you've got this little image for banking crisis down here. Is this something to address the banking crisis? But I know for a fact that I've gone through the rest of this deck and you're not addressing the banking crisis. So the question is, why do you have this here? It's just another image for an image's sake, and it's going to lead you in the wrong direction and not put you on the best footing right out of the gate as far as your first impression goes with the investor. Before we continue, my name is Ed Kang, 7-time funded founder with 2 X's. Just a fancy way of saying I failed a bunch of times to your benefit, because I like to use these pitch deck reviews and my channel and all my YouTube videos to help early stage founders, especially those raising pre-seed and seed, get that traction as well as raise money from investors and avoid the catastrophic mistakes that I've made during all my other startup ventures. If you like this type of content, I appreciate a like, comment, subscribe. That's always helpful. If you are a founder out there and you are looking for your own pitch deck review, we got a special process going on. I get a lot of requests. Stay till the end of the video. I'm going to show you how to get that done. And as always, thank you to all you courageous founders that submit your deck and allow me to do these pitch deck critiques and reviews so that everybody can learn together. My encouragement to you is to take this review and show it to your colleagues and get some validation or invalidation as far as my advice is concerned. I think you're going to find that many share the same opinion as me as they look through this from an investor standpoint. So let's not keep everybody in suspense. Let's just jump right in. Here's the problem slide. You don't want to have this big statement up here, the big text. Just put problem in nice small text and then make this statement much bigger. Let's read this. Banks need digital transformation, not to compete, but to survive in a digital world. This is not a problem statement. This is basically a marketing statement, and you're talking to the customer or you're talking to the bank, and you're saying you need digital transformation, not just to compete, but survive in the digital world. Doesn't mean anything to the investor. All investors want is the size of the problem, and they want the severity of the problem, the cost of the pain, because investors want to see, do I agree with this problem? Is this problem big enough that if I put some money into it, it's going to make me some money? Now we go into these 3 bullet points, and you've wasted the opportunity to make a first impression with this main headline up here, but let's read these bullets. Why? Banking customers demand better, faster, and more personalized experiences. Now we're getting closer to a problem. Fintech companies take $1.6 billion in profits from the banking industry. Now we're getting to another problem. Lack of personalized digital programs diminishes profitability. So the problem, is it profitability? Is it that fintechs are coming and eating these banks' lunch because they can't do digital transformation like everybody else? Is it these banks are losing customers because they want faster, more personalized services? There are so many question marks here. This problem slide basically goes in 1, 2, 3, 4 directions. You need to pick one. Furthermore, if I peek into the rest of your deck, I know you're talking to community banks, but the problem is you're not mentioning community banks anywhere else in this problem statement, and that's an issue. So you might as well say something like, how many community banks are experiencing struggles and losing $1.6 billion in profits, if that is indeed what the community banks are losing? I'd rather see something like 100,000 community banks are losing X amount of dollars in profit because they don't have personalized digital programs, or customers are running away from them because they want faster, better, more personalized experiences. I don't know, but this problem statement needs a lot of work. We are all over the place. And if you cannot nail the problem statement, everything else in the deck starts to get misaligned, because we need to understand, does the solution actually solve the problem? Does the market size actually reflect the problem and the solution, how it works, etc.? Even though you've lost me already in this problem slide, I don't know which direction you're going. Let's continue and see if we can start to help this deck get a little better. Now we get to the solution slide. Once again, take this out and just put solution really small up at the top. And we have, for community banks, digital prospecting tool that provides bankers with pre-vetted business banking leads, reduced expenses, and increased brand awareness. All right, your solution basically is all about marketing. Leads, reduced expense, expenses, lead brand awareness, all that stuff. You've got a solution, but your problem doesn't reflect an issue with marketing. It doesn't reflect that banks are losing money on prospecting, on leads, and they are paying for expensive brand awareness. So now we've got a mismatch alignment. Now we have a second statement here for small business owners. Another big issue. In your problem statement, you didn't mention small business owners anywhere in your problem statement. So why is this here? Pick the problem that you are trying to solve and then create a solution that flips the problem. If your problem is banks, especially community banks, are losing money because they are terrible at marketing for this reason and that reason, then your solution here makes sense. We create a marketing tool for prospecting, banking leads with reduced expenses and increased brand awareness. Then this does not apply. But let's just, for kicks and giggles, think. If this is a solution, an industry-tailored mobile app that connects businesses with the right bank and bank for personalized banking solutions, then your problem needs to be small business owners don't know which banks to go to. Therefore, our solution connects small business owners with the right bank. You see what I'm saying? Problem, solution have to come together. Let's continue. How it works for community banks. Once again, for small businesses, I'm just going to take this and I'm going to ignore it because I think this is a better solution for community banks. A mobile app as a digital prospecting tool, great. An engine recommendation that provides pre-vetted business leads, okay. A CRM system that allows them to keep track of types of revenue requests, outcomes, and return on investment. That's great. But I want to know how it works. You're basically just telling me features. So I want to see, 1, what does a community bank do? 2, then what happens? 3, then what happens? Then what happens? And 5, what are the outcomes and how's the ROI work? Are you using anything special? Is this a SaaS platform? Do they manage it from a centralized place? How do they get this app to other customers? You haven't explained to me how it works to make you be different than everything else. Remember, you always want to answer these questions. Why now? Why us? And what's different? And you're not telling me anything different right here with this set of features. I'm just going to take those for granted. These are generic features. Tell me how it works in literal step-by-step fashion and make it very simple for me to understand. Now we got a competitive analysis. By the way, the order of these slides is all out of sync. And you might think I'm being a little bit harsh, but I'm upping the intensity of these reviews and critiques for a very important reason. I have so many people request deck reviews of me on a daily basis. They want feedback on their decks. And what I do is I send a video, which I'm going to show at the end of this one that you can watch, that explains exactly how you should be structuring your deck. And you need to follow it. And I actually send out an email saying, have you followed my instructions? And if you haven't, well, then I'm going to rip this deck apart and I'm really going to give you a roast. Let's jump in because the issue right here is this deck is all out of order. But let's look at everything slide by slide. Here's your competitive analysis slide. The competition needs to go to the end of the deck, near the end of the deck. Well, we got provide deposits, bankers rating, business lending, all that stuff on the side here. We got Bridge by City, Lendio, Fund and Grow, Lending Tree. Here's what we're missing. I'm missing apps from the actual banks. And you're saying you provide deposits, but nobody else does? But what about my bank here? I know for a fact I can go on my banking app right now and I can deposit a check. So maybe I'm missing something here. Maybe you're not explaining it, but this competitive analysis shows you actually haven't analyzed all the competitors from what I can tell. Bankers rating, I don't know what that is. Business lending, again, I can go to my bank's app right now and I can apply for a loan. So I'm not sure what you're saying right here. Allowing to cross-sell, brand awareness, real time, all these things. There's a lot of confusion in terms of exactly what this app does. So I don't know how to compare all the competitive features, but I do want to give you kudos for doing a benefits matrix. Here's your business model. So you're going to put a freemium business model, and then you're going to start charging lead referrals starting at $5 depending on financial scenario and outcome. I don't understand what that is. That's for banking institutions, depending on financial scenario and outcome. That means you're generating leads for them. I'm not exactly sure. You want to expand that. Annual subscription, $1,500 per banker. Is that an individual employee? Plus advertising and commissions. It doesn't make sense. On top of which, how much are you making with these things? Business owners free to sign up, dedicated banking. So now you're double siding it. Not exactly sure. Why would you charge business owners if this is going to be a lead magnet for banks? Don't you want to give this out for free? Not too sure. Plus, we're not solving for this problem anyway. So I'm just going to ignore that side. Now we get to market size. Banking and lending, digital advertising, spending, bank size. Now you've got me super confused because you're telling me you're sizing your market based on banking, lending, Digital advertising and spending on digital advertising and bank size, not exactly sure. You have added so many factors into your market analysis, doesn't make sense. And I don't understand, where do these numbers come from? This occurs to me to be top down market size. Maybe I'm wrong, but I don't have enough information to figure it out. You want to do a bottom up market size, and that is, and I keep repeating this over and over again, how many banks, community banks specifically, in the United States could be using your stuff. If that is the case and you reach all of them, multiplied by what you are charging, how much money would you make? Then your SAM is community banks nationwide here, but that doesn't make sense because we've already established that your app is for community banks. So community banks needs to be right here. So your SAM needs to be what type of community bank? A certain type of community banks in specific cities, metropolitan areas, community banks that service different types of businesses or have a certain size. We want to know what your business model is best suited for. And then you take the number of those banks times what you'd be making, and then you put that out there. And then you got your SOM, which is California community banks with SBA products. That actually might be a better SAM here. This is what you have to figure out. So we got a real big mix here, but it's looking like this is top down, needs to be bottom up. And then here's this line here. This is really confusing. You got 20 community banks in California with SBA products signed LOI. Does that mean you've got 20 community banks already signed up for this? I've got lots of questions because I know for a fact banking is highly regulated, and you haven't given me any information about how your app addresses those regulations. Because fintech, especially if you're dealing with banks and private information of people and their financial information, you've got challenges, and I don't see how you address those challenges. So as an investor, I'm starting to get skeptical. Client acquisition, this is your go-to market strategy. Again, I'm going to just ignore this on this side. You're going to go to banking associations and you go to LinkedIn. It doesn't explain to me how you're actually going to go acquire. Are you going to sponsor banking associations? Are you going to join and become members? Are you sending salespeople there? And LinkedIn, exactly what does that mean? Is that a content marketing campaign? Do you have a sales force? How does this actually work? Because for the amount of money that I think you're going to charge, you're going to need a sales force. You're going to need a robust staff to help you with this. This is not enough for me to understand your go-to-market strategy. Now we get to traction and timeline. So here's your traction. So we got an investment from the CEO. That's great. We got investment raise. You don't need to put this in the traction slide. You want to put this in the funding slide. Then you went through the Oracle NetSuite Accelerator program. I'd be really curious how they accepted you and what they accepted you to do. Then you've got the UC Law San Francisco Accelerator program, prototype available. Okay, you made 12K in revenue. Makes no sense. I don't understand what's going on. If there's a prototype, does that mean your prototype has made money? I'm very curious on how you made that 12K, because right now I don't see how you made that 12K because I don't know how this app works. So you want to explain to me in clear terms that I can understand. And then you went through the Microsoft Hub Accelerator program and then Ye Goals trademark. You've got such a jumbled mess of all these accelerator programs that you've gone through. I'm not sure. I need some more details. Product timeline, this is not going to be applicable to traction. You don't want to combine it. You want to tell me this is the traction that we got and how many customers we have. That's the big question mark. How many customers is this? What's going on here? This is an interesting slide. There might be nuggets of information, but right now I don't trust it. And I'm just going to be very straightforward and clear with you. Financial projections. Unless you have generated a full year revenue, this does not go into your screener deck whatsoever. This is a pie in the sky, total fantasy projection. You don't know if you're going to make this money or not. And anytime a founder puts that in for a pre-seed deck where there is no substantial revenue, I look at this and I go, okay, you don't know what you're doing and you've got either confirmation bias or you're living in fantasy land. Don't put this in there and create that friction where the investor thinks, these founders don't know what they're doing. Don't do this. Put the financial projections in your due diligence after, once they're convinced that you've got a problem solution market size that they want to solve. Then they're going to ask you your financial model, and then you're going to put in your financial projections because they want to see you do it. Don't put it up front in this deck. It is not important. It will not get you the next meeting. Exit strategy. This is another slide that we do not need to have. This slide can completely go away because you cannot project your exit strategy, nor do you even understand what an exit strategy is if you're at this phase. Now, maybe this founder team has got all the experience and they've been through mergers and acquisitions or they've taken companies public. But if you have had that experience, then you know how much this slide does not make sense. You've got all this data here, and these are all apples to oranges. It's not an apples to apples comparison to your deck. How do you know that you're actually going to exit this? And how do you know that these are going to be your buyers? You don't even have enough traction to start having those conversations yet. Don't put this in. Now, investors are going to ask you what you have in mind for an exit strategy, but that's further down the road, probably when you're at about your seed or maybe A round. At your stage, investors are not going to ask you. They're just going to want to know if you can actually build something and you can achieve those milestones to start showing traction and product market fit. Before we continue to team slide, I want to tell you a little story. I was raising investment for a venture and I had a co-founder, and this co-founder wanted to be a CFO. I was raising early stage capital for our startup. We are at a pre-seed to seed stage. We're kind of in the middle. My co-founder submitted their desire to get a salary as the CFO and said, I'm the CFO. And the investors took one look at that and they said, what are you doing? Your venture is way too early to even need a CFO. That's just going to be extraneous expense. We want to know that you've actually built this. What's going on here? And we had to try and defend the person, the individual who wanted to be the CFO. And let me tell you, it did not go well. And the investor was not happy. And boy, was the co-founder not happy either. I'm telling you this for a reason, because we're going to look at this team slide. First of all, we're going to look at one person being a co-founder. Where's the other co-founder? Is this individual who's the CEO also co-founder? It's not very clear, and that puts up flags right away. Did you hire a CEO to run this whole thing? If so, what's going on? What's the cap table look like? There's an issue going on here. Now, I see a lot of experience happening in the banking industry, and that's a really good thing. But here's another big red flag. Remember, I said I think this solution is going to be very technical because of banking regulation. Your CTO is not a CTO right now, is actually working as an HR transformation consultant for Deloitte. And that may sound super impressive, but there's a software developer with experience in management as a U.S. Army veteran, but as an HR transformation consultant right now makes no sense. This CTO should be in your company building the product. So right now, this is a non-technical team. And that is a big issue when you are building a technical solution for a highly regulated industry like banks. Now I'm getting to the CFO. What is the purpose of this CFO? I don't understand. So now your team is bloated. You got 4 people on your team. And if these people have been hired or they're on your cap table, you have no defensibility to defend the reason they're on that cap table. This team slide creates so many extra questions that you don't want to be answering. You want to get this very straight and be upfront and clear of what everybody's doing. Who's full-time? Who's an advisor? Who's actually going to build this thing? Because that's what investors are going to look for. Now, here's your ask. $500,000, $500,000 to reach $250K in revenue. I don't believe it, because you haven't explained to me what the prototype actually does or how it exists, because you haven't explained to me all the traction. You've gone through a bunch of accelerators, and I'm sure it took a process to get through them, but then you want to get to your next funding round. This is another big fat no-no. We do not care right now if you want to get to the next funding round. We want to know what milestone you are going to hit. On top of which, you don't want to have all this information here because investors may have their own idea as far as their terms are concerned. And so if you put these clamps on here, you're going to be painting yourself in a corner. What if the investor doesn't agree? What if they don't want to invest? What's going on here? Convertible promissory note, etc. Annual simple interest. I don't know how much revenue you're making. There are so many questions here. Just take this out and do a very simple ask slide. We're asking for $500,000 to reach $250K annual revenue in 12 months. Something like that. Just make it straightforward and then put a use of funds. I think you've got that coming up, but that should be on the ask slide. Furthermore, I don't believe that you've got something that you're only going to need $500K to reach all these community banks and go and generate $250K in revenue. You better have something up your sleeve that you haven't told me. Understand, you got all your banking contacts in there. Maybe it's those LOIs that you've already signed up. I don't know what that is. If you indeed have those LOIs, that has to be spelled out very clearly in your traction slide. Right now, we're missing way too much information. You're making so many assumptions that the investor can read between the lines, and it's just not going to happen. Use of funds, you already put this use of funds in there. You see this going on here, CEO, CTO. Your CTO is working already at a HR consulting position for transformation at Deloitte. So I don't understand these numbers right here. Doesn't make sense. You got your CTO getting paid $7,450. Who's doing the development? Is that part-time? Is that full-time? Do yourself a favor. Don't put this in there and just put a breakdown with actual percentages inside these places. And then look, a CFL license waiting period, average 6 to 8 months. I don't know what that means. We got to the conclusion. Now, here's the interesting thing. Your conclusion slide actually has better information that's more clear. G-Goal is a lead generation company for business banking. Why don't we start with that? Just put that right up front. Community banks have a problem with lead generation. We solve that for a digital prospecting tool. In fact, this is fantastic. You could just say, this is the problem, and then here's the solution. And then how it works is an industry tailored platform. This is the how it works. Isn't it interesting that I have to get to the end of the pitch deck for the statements that I needed right up front? And so you should think about clarifying your messages right from the beginning. What is the moral of this story? Follow the pitch deck format that I ask you when you send it. That's the reason I'm roasting this deck and I'm being extra harsh on it. On top of which, the messaging is not clear. There is way too much ambiguity. And with an industry like banking, which I know is highly regulated, I don't trust you unless you actually give me clearer details. Because right now I see a team that seems to have a lot of banking industry experience, but doesn't have the domain expertise to actually set up a technical solution to solve technical problems. If you're telling me fintechs are coming and stealing $1.6 billion in profitability from the entire banking, how does that affect community banking? And show me the traction. Show me exactly how it works and give me more information. Right now, like I said, it's way too ambiguous. So unfortunately, I just don't believe what's going on here. That's it for this one. If you're a founder out there and you want to get your pitch deck reviewed, leave a comment. But I'm going to let you know right now, you're going to get a very clear process to follow. I'm giving you upfront notice. Follow that process so that we don't have to roast your pitch deck in the same way. I'm getting extra tough. I'm going to become a lot more intense with these pitch deck reviews from now on. You've been warned, but we are going to have fun at the same time. And let's be encouraging to this founder. Like I said, any startup that puts itself out there with these founders deserves respect in my book. You'd rather have this type of feedback come from me than shoot your shot in front of investors and then totally fizzle out. So go through this, rework it, follow everything that I had to teach about pitch decks, and I hope to see a new version of this deck. And as always, I wish all of you success out there. Keep it up. I'll see you in the next video.